As we enter 2025, the question on every investor's mind is what's going to happen in the stock market? Is the stock market going to crash, or are we going to continue seeing the stock market boom? And as you dig into this, you start to see a lot of conflicting data. On one hand, investors are sitting on more cash than ever on the sidelines waiting to be invested. Even Warren Buffett has liquidated some of his stocks to sit on his largest cash pile ever. While on the other hand, the average American is running out of money and struggling to pay their bills. And then to make it a little bit more confusing, you have what I like to call the X factor, which are all the changes that we're going to see in 2025, including things like potential tariffs, and our growing national debt in the United States, and the global economic slowdown that we're already seeing. And now you can start to see why people are confused. Now, nobody knows for sure what's going to happen in 2025, not even a random guy on YouTube. But what I want to do in this video is talk about what could be coming based off of all the information that we know today. More specifically, I want to go over three things. Number one, how did we get to where we are today in the stock market? Number two, what moves the stock market? And number three, what are the factors that could be moving the stock market in 2025? That way you can be a more sophisticated and educated investor. So let's start with how we got to where we are today, but I have to remind you that investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. 20 years ago, the stock market, more specifically the S&P 500, was at around 1,900 points. Over the next decade, the S&P 500 rose to 2,700 points, which is a growth of around 30% in the stock market. And then over the last decade, we saw the S&P 500 grow to around 6,000 points, which meant that the stock market grew by around 122%. And by the way, most of this growth was actually just in the last 5 years, because in 2019, the S&P 500 was only at around 3,700 points. So most of this growth that we saw over the last decade was from 2019 to 2024, post-pandemic time. And this is where every investor is wondering what's going to happen in 2025 and what's going to happen over the next decade. And we could take a look at what Wall Street's saying. According to Goldman Sachs forecasts that over the next decade, the S&P 500 will yield an annualized return of just 3%. So Goldman Sachs says that the next decade is not going to be as strong as the previous decade, but they're still saying that 2025 is looking pretty good. Take a look. Goldman Sachs recently published this article on their website where they said the S&P 500 will grow by 10% in 2025. So take that for whatever it's worth, with a grain of salt, because nobody knows what's going to happen for sure. But it gets even more interesting when we compare this with what we've seen happen in the economy. The United States economy is measured through a number called GDP. And 20 years ago, our United States economy was $12.2 trillion large. Over the next decade, we saw the economy grow to $17.6 trillion, which is a growth of around 44%. And then over the last decade, we saw the economy grow to around $29 trillion, which is a growth of 64%. Which means our economy has been growing, but our stock market is growing even faster than the economy. In fact, over the last decade, we saw our stock market grow almost twice as fast as our economy. What does this tell us? Well, this is getting us set up for an interesting year in 2025 and definitely an interesting decade. And this is one of the reasons why on January 7th, 2025, I'm hosting a free live and virtual wealth building workshop, which I would love for you to join, where I'm going to be going over how you can build wealth in 2025 and accelerate your wealth by, number one, understanding how you can start investing your money by creating a system for your money. But then number two, how do you find unique investment opportunities when we're seeing these changes in the economy? And then number three, how do you actually research those opportunities? Because you have to know how do you actually analyze those investments. I'm going to be going over all of this on January 7th for free. I'm doing two workshops, one in the morning at 10:30 a.m. Eastern Standard Time, and then in the evening at 8 p.m. Eastern Standard Time. If you'd like to join, it's completely free, but you do have to save your spot because there's a limited number of people that can join me live. So if you want to join, I have the link for you down in the description below. But do you want to know what makes this even more interesting? It's that our national debt in the United States is growing even faster than our economy. This is why the Federal Reserve Bank says that the government is going down an unsustainable path, because we have our debt levels growing faster than our economic growth. Take a look. In 2004, our national debt in the United States was $7 trillion. By 2014, it jumped up to $17.8 trillion, which is an increase of around 150%. And then between 2004 to 2014, we now have a national debt at around $36.2 trillion at the time of me recording this video, which means our national debt has grown by around another 112%, which means our national debt in the United States is growing significantly faster than our economy, and many times it's growing even faster than the stock market. And to say this bluntly, the concern that I have is we will eventually see a recession. We will eventually see a market crash. When? I don't know. But we know it will happen because recessions and market crashes are a part of our economic system. We have seen 16 recessions over the last 100 years. We know that more recessions are going to come in the future. And the concern that I have is when that next downturn happens. The first issue is we have a lot of debt, which is a problem. But the second issue is we have a lot of younger people which are entering the markets, which is good, but a lot of people are under this belief that markets should continue going up by 20, 30, 40, 50% a year, and that's what's normal. When in reality, over the last 100 years, the stock market has averaged 10% a year per year over the last 100 years. Now, that doesn't mean the markets always go up by 10%, but it means on average. And so the concern is, if we start to see a little bit of a downturn at some point in the future, many people have not set themselves up for the type of downturn. That we have a lot of people using their investment accounts kind of like a separate checkings account, that they just need the money to go up to help pay their bills. But that's not how things work. We will eventually see a downturn. And if you're not prepared for that, not only are you going to be burned, but you're not going to be able to capitalize on opportunities. And we're already in a society where people are so emotionally tense. But the reality is we know markets go up and we know markets go down. We know we have concerns. Our economy is growing at one speed. Our national debt is growing significantly faster than that. And the markets are growing faster than our economy. Does this mean that we will see a recession in 2025? No, not necessarily. That's not what I'm trying to say. What I'm saying is eventually we're going to see a downturn. I have no idea if it's going to be next year or 10 years from now. But when it happens, a lot of people are not prepared for that. And that's going to burn people. And that's why I want you just to understand how markets work. That way you can find the right opportunities. And if you are a passive investor, you have to know your strategy. If your game is, I'm just going to invest into the S&P 500, then you don't have to worry about all the things that are happening with the financial markets. You don't have to worry about who's in the White House. You don't have to worry about all this other noise. That's just noise. Then what you do is just ABB. Always be buying. It doesn't matter if it's raining outside, or it doesn't matter who's in the White House. It doesn't matter what's happening in the world. You just keep buying because we know that the stock market goes up over the long term. I mean, if you look at really any decade, we've seen that markets have gone up and up and up, decade after decade after decade. Have there been recessions? Yes. Have there been market crashes? Yes. But despite that, markets have gone up over the long term. And so this is where you got to know your game. A lot of people are saying they're long-term investors, but then anytime you see a little bit of a downturn, you see people panic and freak out. But that's where I want you to understand that we will see more downturns. We will see a big downturn at some point. Be prepared. And that means, number one, don't panic, but use those opportunities to buy more. Then if you're more of an active investor, not a trader, but an active investor, look for the good opportunities and understand how to analyze your investments. That way you can make smarter decisions with your money. And again, that's why it's so important for you to know your strategy. I'll be going deeper into this on January 7th in my workshop. But this now brings me to part 2. Now, this might seem a little bit basic, but the stock market, like any other asset class, ultimately depends on supply and demand. When you have more sellers than buyers of stocks, stock prices fall. When you have more buyers than sellers of stocks, stock prices go up. You might think that if Amazon makes a bigger profit, the stock is going to go up. Well, if people are selling off the stock is going to fall. Because anytime you trade a stock, somebody has to buy that stock or somebody has to sell that stock. So ultimately, you have to understand the supply and demand side of the stock market, even more than understanding profitability, understanding all the other factors that move a company. In the short term, supply and demand is what can really create these big swings in the stock market. One of my favorite quotes about this is from Warren Buffett, who says, stocks are safe in the long term, but they're unsafe for tomorrow. What that means is there's a lot of factors that can move the stock market for tomorrow or next week. But over the long term, we start to see the correlation between the stock value and the actual company value, which is what investors are looking for. However, you have to understand the supply and demand, and they're really the same factors that will influence somebody to buy and somebody to sell. And those include things like having the cash to invest, being optimistic about the future of the company and the economy, and then just general emotions. Starting with cash, If, like we see today, investors are sitting on cash on the sidelines, well, that can create new potential demand because if people have the money to invest and people are still investing, well, that can continue moving stocks higher because you have more buyers coming in. But if people run out of money and people don't have more money to invest and people need money to pay their bills because their economy is going down, well, then that can push people to sell those same stocks, which can pull those stocks lower because they don't have cash on the sidelines. So if people have cash, well, that can help stocks go up because there's still buyers available. Likewise, being optimistic about the future. I mean, when people buy a stock, they're buying it because they believe that the stock is going to be more valuable in the future. They're buying it because they believe this company is going to make more money in the future. And so you have to have this level of optimism to be investing in stocks. And unfortunately, a lot of stock traders don't see very long term. They're thinking in the short term. And so when you start to see things go down, they think the whole world is going to end, and that can lead more people to sell. Likewise, when things are going up, sometimes people think the markets can only go up and get people excited to buy. And this is where people are looking at things like a company's profits. Are they going to continue going up? Are we going to see more growth in the economy? Are consumers and Americans still spending money? All this has to do with optimism as to how the markets and the economy is going to do in the future, because when you're buying a stock, you're making an investment for the future. So you want to know what's going to happen tomorrow or next week or next month or next year, not today. And then, of course, is emotion. We know that emotions drive markets because when people freak out, we can see the markets fall very quickly. When people get excited, we can see markets go up very quickly. This is why the markets can move so fast, and emotions can drive markets, especially in the short term. And this is why, again, markets are risky in the short term, but they're much safer over the long term, which is why I'm an advocate for you to be an investor, not a trader, because trading is a very risky game and it's kind of like gambling. Nobody knows what's going to happen tomorrow, but we know that over the long term, markets have gone up. So now that we have a general understanding as to what moves markets, when there's more buyers than sellers, stocks go up. When there's more sellers than buyers, stocks go down. Let's get more specific and talk about what's coming in 2025. Well, on one hand, we know that investors are sitting on more cash than ever before, while at the same time, the average American who is not an investor is seeing less and less cash in their bank account. And if that didn't make things confusing enough, of course, we have a new president entering the White House in January, and a lot of people are very optimistic that Trump is going to help grow the economy in 2025, which is also driving some of the emotion. So let's dig into some of the changes that we might be seeing in 2025. First, President-elect Trump has talked about imposing wide sweeping tariffs on countries around the world, which would be essentially a new tax. And one of the reasons why he wants to do that is to fund big tax breaks here in the United States, which is also a big economic change that we could be seeing in 2025. Along with these tax cuts, Trump has also talked pretty widely about deregulation. For example, deregulating the financial service industries. That includes companies like banks on Wall Street, which would make it easier for them to do business and potentially make more money, which could help those companies make bigger profits and could help those stocks. Is it guaranteed? No, but that's what the hope is. Along with that, Trump has also talked about making big changes to the government in general. You've probably heard of the Department of Government Efficiency, DOGE. That's going to make some big changes, which we've never really seen the kinds of before, and we don't know what's actually going to happen. And then, of course, Trump has been advocating for lower interest rates in the economy. But the interesting part about the interest rates is our interest rates are not set by the government. They're set by the Federal Reserve Bank, which is not a federal entity. It says so on their website. And so Trump, on one hand, says he wants lower interest rates, but Jerome Powell has been talking about how the Federal Reserve Bank is not planning on cutting interest rates aggressively in 2025, which is going to create for some interesting entertainment on 2025 with whatever happens between the White House and the Federal Reserve Bank. But what we do know is there's going to be some big changes in the economy in 2025. What we don't know is what the impact of these changes will be. Like, we don't know which tariffs are going to be passed. We don't know to what extent they're going to be passed. And we can look at history to see what tariffs have done in the past, but of course, we don't know for sure. And this is where, again, it is so important for you to learn how to be a sophisticated, calm investor, not be an emotional investor. So one of the reasons why I've been working so hard to build Market Briefs, which is my free financial newsletter, because we cover all the financial news in an unbiased way in one email. We don't need to have the sensationalist headlines because it's all in one email. If you haven't joined Market Briefs yet, the link is for you down in the description. But this is where, again, the reason why so many people lose money in the stock market isn't because they made a bad investment per se, it's because they get emotional. And then when things go wrong, they panic. And this is where, again, if you know your strategy, it's about understanding how do you stick with your strategy and how do you analyze a good investment to make in the first place, because nothing will go straight up. But you have to understand how do you find those investments and how do you stick with your strategy and how do you find the investment opportunities, especially in 2025 when all these crazy things are happening, because for some, these are scary. For some, these are confusing. And for some, they're very emotion driving. But for the financially savvy, they create opportunities because they can cut through the emotion and they can see how these things will create changes and find those opportunities there. This is what I want to go over on my workshop on January 7th. So if you haven't registered yet, again, that link is for you down in the description. So when it comes to 2025, what we know is that there's going to be a lot of changes. These changes can move the markets up or down depending on supply and demand. Nobody knows what's going to happen for sure. We know markets go up and down in the short term. Over the long term, we know the markets will continue to go up. But in 2025, the thing that we don't understand is what's really going to happen in the economy. Are there concerns? Absolutely. I talked about how our national debt levels are really growing faster than our economy, and that's unsustainable. But we don't know when we're going to start to feel the impacts of that. We also don't know what is going to be the impact of all the government changes and deregulations and tax changes. These things could help boost the economy and help boost the stock market to new heights. Or something could happen and trigger a whole new change in our markets, a whole new change in our economy, and we could see a downturn. The key for you isn't to predict what's going to happen, but rather understand the different things that move the markets. That way you can find the opportunity no matter what happens. That way you can win when markets go up and you can win when markets go down, but that requires you to be a financially savvy investor. The stock market just took a nosedive because the Federal Reserve Bank just admitted that inflation is apparently still a problem, and you should ignore everything that Trump says and expect less interest rate cuts in 2025 because apparently inflation is still a problem. This is what Jerome Powell, who was the chairman at the Federal Reserve Bank, said.